Hello, welcome to the ESS BIZTOOLS subscribers webinar today. The past has no future. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome. I hope you're having a great day. If you have any questions during this webinar, can you please type into your chat box and I will answer the questions later in the webinar. If you're watching this webinar at a time more suitable for you, can you send me an email with any questions you have and I will get back to you. We're looking today at the past has no future. Ominous words were utilised to describe the business outlook, and these were made in the white paper produced by Thomson Reuters, Reading Australian SMEs in 2023's Changing Economy. I think it's a good idea to read this white paper, get a better idea of what Thomson Reuters sees the next 12 to 24 months as being like. So the ominous words that they used to describe what most SMEs had faced in the last couple of years were challenging, difficult, unprecedented, demanding. I think these words are still appropriate today. What I'm observing in the marketplace, what I'm reading about, challenges facing businesses. The new mantra for SMEs should be, the past has no future. This was the comment within the white paper, Thomson Reuters. They believe that the difficult times that we're currently experiencing, high inflation rates over 7%, high interest rates now 3.7%, are going to continue for the rest of 2023 and into 2024 and perhaps even longer. Difficult times ahead. And we've had nearly 3 years of difficulties prior to that because of the COVID-19 problem. So accountants need to assist SMEs to focus on strategies that can bring growth to revenue. That was a key comment made in the Thomson Reuters white paper. Bring growth to revenue, and profit is the key for SMEs. A lot of balance sheets have been run down, cash has run down. Businesses need to trade profitably, and they will need your assistance. It might be as simple as doing a review as to how the charge-out rate's been charged for a tradie. Is it going to cover their overheads and generate a profit? Are they calculating their likely return on a realistic estimates of productive hours for themselves and their team? So let's look at the challenges confronting SMEs. And please think about your own clients as we're going through this. Cash is tight for many. Online training is very important for the SMEs team. I think you need to be communicating with your clients about the necessity for training and mentoring of their team to improve their standards. Every business in Australia appears to have a problem of team attraction and retention. I've just been talking to one of our long-term subscribers in Melbourne. He's told me about the problems he's having with retention of staff, being poached by larger firms. He's not a very happy man. But this, unfortunately, is the marketplace we now have to operate in. So both within your accounting firm and to your clients, I think we need to be really talking about the need to make sure that team members are appropriately trained, they're motivated, they're mentored, and they are given interesting and challenging work to work on. Otherwise, they will leave. Within SMEs, there's a belief that they must grow to survive. This is what's been outlined in this report. This white paper was based on detailed interviews with 6 different business CEOs. One was an accounting firm CEO. The others were drawn from a wide range of business groups, and they all believed that they must grow to survive. How are you going to help your clients grow to survive? Where do you start? I think charge out rates for both professionals and tradies and manufacturing business is a good place to start. And for a retailer or wholesaler, looking at the mix of products that they've got and the various markups and making sure that the client understands the need to classify the stock. They've got star stock, which is the high volume, high markups. But unfortunately, it's a very rare business that can say, all we are going to sell are the star stocks. Doesn't work that way. Virtually every business has cash cows. You sell a lot of volume, but it's only a very small markup because that's the marketplace. It specifies the price. Then you have the problem mines. These are the things that someone bought when they weren't supposed to buy. Or one of my observations is that the automatic reorder on a computer system replenishes stock that someone may have taken 2 or 3 years to get rid of. In fact, I was a witness to an actual blow up over that very issue. And because the guy it blew up was a friend of mine. And I was working in the firm that he was a senior manager of, but he wasn't the owner, in their office one day doing a strategic plan, actually, and I could hear his voice and he was exploding. And I went out and said, "What's wrong, Jim?" And he said, "Someone's ordered this stock line," and he produced it with a huge, this was a jewelry business, huge vases. And he said, "I've just got another 30 of them. It's taken me nearly 3 years to get rid of the last ones. They sell at $300 odd each. No one wants to buy them." And I told them not to reorder anymore, but they've now turned up. And when we explored what had happened, it was in the computer system, and the computer system just had an automatic reorder. Someone had put in a minimum stock item, which was half a dozen. They got down to half a dozen, and which he cleared in the intervening week or so, because he put them on specials to get rid of them forever. And then suddenly you have this extra stock. So your clients might need assistance in that. And then you've got the real hopeless items that don't know where they come from. Someone should just get rid of them so that your client can clearly see that the stock they're going to sell will in fact generate enough income to cover the profit forecast. A lot of people don't understand that. Within ESS BIZTOOLS, you've got a package there which will take you through, able to give that sort of advice to your clients. There's changing market conditions. They're changing all the time. So you need to be conscious of those, to read the financial press. The financial reviews should be paper that you read every day. You can view it on the internet, you can subscribe that way. It's the way I do it every night. There's a lot of articles there that you can save, print up, utilize, develop your knowledge. How are you going to assist clients to identify new market opportunities in the marketplace? Is that a new store being opened? Is it starting some new lines? Is it exploring selling product via Amazon or some of the other affiliate marketing suppliers that are around these days? Would that help your client to develop some new markets? Inflation's over 7%. The Federal Treasurer believes that this is going to be reduced, but he's not running SME businesses, is he? And I don't think SMEs should be holding their breath, hoping the inflation rate's going to come down in the short term. Reading articles gives me the feeling that the expectation is this will be up for some time. And a lot of that is driven by what's happening in America, where they appear to have very high inflation rates. Interest rates, what's going to happen there? They've been increasing. The Reserve Bank's under political pressure and public opinion pressure, but they should stick to their guns. Inflation's the big problem. We've got to get it down. I think we're going to have high interest rates for another couple of years, or higher interest rates. I can remember rolling over commercial bills back in about 1990 at a very high rate, 21%. So interest rates can get a lot higher, but these rates now of what people are paying for their loans at present do appear high compared to what's happened in the previous 10 years, where we had this dream run of low interest rates. I think that's probably gone for a long time. So how are you going to advise your clients? Businesses continued in the high interest rates that we had in 1989, 1990, 1991. So businesses need to acclimatise to that. And there's thousands of job vacancies in Australia. But people still have trouble, and there's a lot of people unemployed. People still have trouble getting staff. Team training's important, and you need to make sure that your client's talking about their real conditions. And this also affects you. What training is happening in your firm with your clients? Cash flow, I mentioned a bit earlier, is one of the big problems. There's a shortage of cash. Well, what's going on in the debtors area? Because normally when there's shortages of cash in businesses, it means that debtors' days outstandings increase. So does that mean that your client's been taking on other people's problems? They've put hard pressure on some of their customers and they've departed and end up going to your client, and your client's now got the problem? Is that part of the issue? Does that mean they haven't been checking who's asking for credit? I think you should be closely looking at the debtors' days outstanding, making sure it's been calculated on the first or second day after the end of a month, so that the leadership team understand it and they are immediately getting down to contacting people to try to make sure payments are being made. For many SMEs, when you look at confronting the future, the past is no guide, because for the last 2 to 3 years, we've had these very difficult conditions. A lot of businesses were established in that period. So they can't go back to look at the past, but it's a whole new ballgame. Businesses need to know more about their key performance indicators and their data. Some SMEs do know these things, but a lot of them don't. And unfortunately, a lot of them have never been asked questions about their key performance indicators or their data by their accountants, if the accountants are just preparing their annual accounts and tax returns, because it's really not an issue, is it, when you're preparing tax returns, to analyse the gross profit percentage, the variation in turnover from one month to the next month, what the labour to turnover percentages are, how they vary from month to month, week to week. But it's very important for the person running the business. What's the average sale? Why did the average sale go down yesterday or up yesterday? Because movements in either direction can give some information that your clients need to know. So key performance indicators are very important, daily, weekly, monthly. If you get nothing else out of this webinar today, please have a look at what your client's doing with their KPIs and make sure that the people within the client's team understand what the KPIs are conveying to them. So I found out many years ago when I was a chief financial officer, company secretary of a listed public company, We were in the meat industry. We had meatworks and butcher shops and delicatessens and businesses all over the 3 eastern states. And I was in one of our large meatworks one day talking to the foreman at their smoko break and asked them, were they happy with the key performance indicators? And I can't repeat in a video what I was told. They did not know what these KPIs were all about. One guy just said, I'll show you where I file it, and he threw it in the waste paper basket. So I went back to them at lunchtime and sat down and talked to them and said, now this is what this is supposed to be conveying to you. They said, well, change the name. We don't know what key performance indicators mean. So we come up with another name that they knew something about. And they didn't understand some of the terminology. So we agreed to change some of it. We got it out of the accounting jargon so that they could understand it. And then I worked through and showed them how it could help them do their job. And they liked that idea. So don't be afraid to sit down with your client's team and make sure they understand this information. Because when I said to these foremen, there's about a dozen of them in the room about the KPIs, they said, oh, we thought this was all just for you blokes. I said, no, this information's meant for you and the management. So make sure they understand it. I think confronting the future is as blunt as this for clients running SMEs who are only getting financial accounts and an income tax return. That doesn't help your clients successfully run a business. Now, you're a subscriber to ESS BIZTOOLS. That's who this webinar is for. So hopefully you have been able to move all of your SME clients into at least some of the advisory service work that are covered within ESS BIZTOOLS. The past has already claimed a lot of businesses through insolvency. I was reading our local newspaper yesterday, and there's a complete article on a lot of the problems in the building industry, but that then has flowed on into plumbing suppliers and other suppliers to building companies. So we need to be careful on how we're advising clients. I think your SMEs need assistance month by month at the very least, not in 12 months' time. It's too late. They can't correct anything. They need to be getting information so there's a problem, they can change something tomorrow or even now, today. Not later. Now. It's got to be the message. And you can do this. And this is what you would be doing if you were employed as the full-time chief financial officer in those firms. You wouldn't be doing everything, worrying that, or saying that, well, we'll fix that up in 12 months' time when we get the official accounts from the tax agents. No way. You've got to be reacting to things daily, weekly, monthly. That's the cycle. Daily, weekly, monthly. So SMEs need assistance in their planning. Have a discussion with them. What do they want to achieve? Is it realistic? If the business has been trading at a $1.5 million turnover a year, around that for the last 3 or 4 years, it's unrealistic to write down $6 million for this year unless they've really got a good story to tell as to why it's going to go up a staggering amount, $4.5 million in a year on a $1.5 million turnover. Be great, but they're going to be working hard, aren't they? So try to make sure it's realistic and prepare a business plan. Sit down with the leadership team or just the client if there's no leadership team, but you should be encouraging every client running a business to have a leadership team. Not only be 2 or 3 people, but bring them together, share some of that responsibility so that the business plan could record what you're trying to achieve in the business, what the targets are. I conducted a podcast with Andrew Geddes last week, which we've sent to you, part of the members alert we sent a couple of days ago. Please listen to it, because Geddes stressed this concept that the leadership team should be every month identifying 3 key issues to be sorted out in a maximum of the next 3 months. 3 key issues. Get them fixed. some of these things could be embedded in the business plan. So once the business plan's done, you're able to prepare the marketing budget and marketing strategy. Now, you mightn't prepare the marketing strategy, of course. There could be a separate consultant, or the client may have an in-house person that does that. But all this needs to tie up: the business plan, the marketing strategy, the marketing budget, so that you can then have budgets for each individual business operation, not all put together into one budget, separated out, because you should have separate profit and loss accounts for each of those units. In the podcast I referred to with Geddes, he talked about accountants in a farming area in New South Wales, that the client had 5 or 6 operations. They were running cattle, they were running sheep, they were growing food to feed their cattle, they had a transport business. They had separate profit and losses for each of those, separate budgets, and they had inter-firm transfer system whereby they'd set prices and they'd sell from one to the other. The end result, they were able to get an accurate reflection of what had happened in the various operations through down to profitability. And prepare budgeted key performance indicators based on the budgets. These are very important because, as I've already said, KPIs are a very important part of this process of helping clients to run better businesses. So base them on the budgets. And there will be key drivers. Now, key drivers are the sub-accounts of items that you should be looking at very closely when you're doing budgets. Predictive accounting, it's what my colleague Paul Barnaby calls it. Debtors, creditors, inventory, energy requirements, because you can prepare KPIs for each of those. You prepare the debtors forecast and then calculate what the debtors days outstanding is going to be at the end of each month in the budget. You can compare back. Creditors days outstanding is also very important for many of your businesses, especially in the difficult trading terms we're now in. Why? Because a lot of them may have entered into agreements with their key suppliers, the suppliers they really need to keep their businesses running, that they will make payments on a 30-day basis or maybe a 40-day basis if they've been able to negotiate. They need to be careful they haven't exceeded those terms, in case someone decides within the supplying organisation to cut them off. No more supplies, because they're going to deal with someone else. Also, projected balance sheets are a very important part of the process. Number one, it proves the whole budgeting process is balanced in real accounting terminology then. But the more practical reason is so that you can sit down with your client and show them what the financial picture is going to be of their business in 3 or 5 or 6 or 7 years' time, depending on how far you want to go through and forecast. And that might keep the client sane by being able to see, okay, all this what we're doing research and development at present. We're going to take on debt to expand our premises and do a few other things. And this is what it will all look like in 5 years' time on a financial basis. I think you need to establish accounting systems so your client can receive reports daily. Key performance indicators are a great thing. In the business that I was a CFO on, we wanted to know, especially in retail operations, what the daily sales were in gross terms, what the average sale was on a daily basis. Then weekly. Businesses need weekly performance reports and a profitability report and the key performance indicators that can be calculated weekly. Big companies do it. The whole meat industry works on a weekly basis. But Woolworths, Coles, a lot of other major businesses all know at the end of each week how they traded. Now, sure, there's some guesstimates in some of those figures because not all the suppliers' invoices are to hand, but you can put in estimates. You just need to know you've got those goods or services and make sure that a figure's been included in the performance. But you can get a very accurate figure. monthly business units profit and loss account for the individual business units, not consolidated, and compared to the budget. Gives some meaningful information. And they've got a monthly balance sheet which enables an analysis of key items, especially the working capital items, debtors, inventory, work in progress, creditors, bank account. How do they all compare to the original budgets? This is the cycle that I think you should be implementing for your clients. Daily, weekly, monthly, and then repeat it again. Daily, weekly, month. Getting information at the end of the year means nothing to your clients as far as running their businesses. As part of this process, you should be analysing the funding requirements. They need a cash injection. The client confident they can tell the compelling story. They may need some training, practice sessions. They could consider the funding opportunities. Are they going to try to get a loan? But do they have security that's available that the bank or lender will accept? They could raise capital under Section 708 of the Corporations Act. That was an amendment that was made nearly 40 years ago now to enable a private company to raise up to $2 million in a 12-month period from a maximum of 20 investors without having to issue a prospectus. Now, it's been a great section. It's the only section we had for a long time to help businesses raise capital. But now we've got crowdsourced funding equity raising. As long as their turnover's under $25 million, not on a stock exchange, and the gross value of their assets is under $25 million, they can raise up to $5 million in a 12-month period from the public. There's a process that's all set out in ESS BIZTOOls. And if you are an advanced subscriber, you've got access to that. If you're a startup subscriber and or starter package subscriber and you're interested, you can subscribe to the crowdsourced funding as an independent package if you wish. And we've got early stage innovation companies. Don't forget this. This is for companies primarily under 3 years of age. There are some exemptions. Company could be up to 6 years of age, who have undertaken the development of a new or a modified product, process, service, and improve something. Now, the real benefit is that the company itself doesn't get anything other than the shareholders' contribution, but there's some carrots built into this legislation for the investors. And an investor receives a tax offset based as a percentage on their allowable investment. For a sophisticated investor, the rebate can be up to $200,000. That's calculated at 20% of the investment. But for a retail investor, the maximum rebate is $10,000 because the maximum investment that a retail investor can make in an early stage innovation company is $50,000. But it's a great attraction, and a lot of investors are now aware that these carrots are there. They still want to know it's a great business, but the potential to be a great business. I've already referred to looking at pricing strategies, trading charge out rates, professional firms or the retail wholesale, looking at the mix of the products, the volumes, the classification, and therefore the various markups that are available. Does all that going to give enough money to pay the overheads and also make a profit? I think you should be preparing a monthly financial report. In making that comment, I'm assuming that you're performing this virtual CFO role for your clients and that you're going through these monthly financial accounts so that you can then prepare a report to go to the leadership team. And hopefully you're a member of that leadership team meeting. And you'd be looking at the key performance indicator overview, what stands out. And it's amazing when you line up KPIs in a corporate sense. Odd figures stand out. So someone needs to investigate them. If the average sale was $19.20 and it's been at around $19 or $21 for weeks, and then suddenly it comes in at $8, someone needs to ask questions. Or conversely, if it jumped to $44, someone should be saying, wow, how did that happen? Did they do something magical which caused that to happen? Or is it a mistake? Or was there one huge order come in that day and it all got processed and it's not going to be repeated? Businesses work on that. Management needs to know that. It mightn't mean too much to an accountant such, but you're the conveyor of the information to management. Management's getting paid to make decisions, but they need data, they need information. I know in my public company career, I worked with some outstanding managers, but they were also very demanding on information. They wanted to know information so they could make the decisions. So they got paid the big dollars for it. So what's the working capital position? Capital expenditure, if the company's undertaking that. What's going on with research and development, if there's research and development projects being undertaken? And I think it's a good idea to update the budget profitability report. We've now got actuals for 4 months, and we add on what we think is going to happen in the next 8 months, and that's going to be our result. Keeps people sane. Strategic reviews. I've referred a couple of times to the podcast with Andrew Geddes. Please listen to it. Because Andrew went through a whole number of scenarios. In fact, I've identified 12 different key issues that we discussed. And one of the big ones was strategic reviews. Now, Andrew still acts as a consultant chairman, he calls himself, with most of his clients. He's got 8 of them. 2 are accounting firms. The other 6 are other types of professional firms, engineering, architecture, and some actual production companies. And he does work for them. Now, we recorded our webinar, our podcast on about the 16th, I think it was, of this month. And when I rang him to confirm the podcast, he said he'd been very busy in April. And I said, oh, yeah, what have you been doing? He said, we've done all the strategic reviews for next year for my clients. So they'd sat down in April and done the planning I'm now going to take you through for each of his clients. They planned 23, 24. If you started that with any of your clients. And that's why I'm saying here, June's a great month for this work. Might have been better to have been done in April or May, but let's get it done in June if you haven't done it yet. So where are we now? Where's the business? What do we want to look like at June 24 or even beyond? Let's do an analysis. And Andrew's turned around the SWOT analysis to get something slightly different, a twos analysis. T is the trends. He thinks we should be really talking to clients about what are the trends that are obvious in the marketplace. Let's go back to the example I gave you before on average sales. If average sales are dropping, that's a trend. What's that saying to the business? They keep on dropping. What can we do about it? Have we got to increase throughput so that the total dollar figure is still what we might have originally budgeted, even though average sales have gone down by 25%? Or if that $44 figure that I mentioned or thereabouts was not an anomaly, what's got to be done to try to continue at that average every day? And what's happening with the number of customers also? So it's no use having a high average sale to customers for part, because that way you're not potentially not going to be getting any extra revenue. So what's the trends? What are the opportunities in the marketplace? What's been identified through customer advisory meetings, through team meetings with your client's team, through interaction with suppliers, through people looking on the internet and observing what's happening in similar type businesses around the world? What are the opportunities? What are the weaknesses? Still haven't been fixed in this business. It might be a team member situation. Well, maybe there's got to be more training and mentoring and development within the firm. And what are the strengths? What's this business really got going for it? It might be locations. It might be the team. It might be the unique distribution they've got on a very good product, and therefore make sure they're paying them on time. Otherwise, that could be transferred to someone else. So sit down and do the analysis, the TOWS analysis. TOWS. This is Andrew's recipe for a strategic review. What's the financial performance? I just put in April. He was probably looking at February or March. What's going on with customers? Have we lost any customers? Have we gained customers? What's the feedback from customers? What's going on with products and services, competitors, demographic changes? What decisions are the government making? There's all sorts of decisions getting made by the state, federal, and territory governments. What are the financial targets for 23-24? And then the business plan can be updated. That's the strategic review. For most SMEs, the past should not be dictating the strategies. Most SMEs are not receiving this type of reporting unless you have fully embraced the message that we are giving to our members. I think this new strategy should be established, that you're servicing your clients with systems 52 weeks in the year. Doesn't mean you're there every week, of course, but you make sure the systems are in place. And the daily and weekly processing should be done by the client's team, unless you're contracted to do it. So your key role is really what I've just been saying. Set up the systems, train the client's team in those functions, and then attend and review, make sure the information the clients getting fed is accurate, and make sure that the monthly accounts are prepared, reconciled, because they're the proof of what is happening. The key is that your client will be receiving financial information at least weekly and in detail on a monthly basis, 52 weeks of the year, 12 months of the year. This is the vital requirement. It's significantly different to an annual set of accounts and an income tax return, which doesn't guide anyone. So in summary, thank you for your support of ESS BIZTOOLS. We believe that this is the message that Thomson Reuters in this white paper are trying to deliver. The past has been rejected, throw it away. Information and producing systems need to be introduced to guide your clients through these challenges as we go into the start of this new financial year, 2023-24. The opportunity is there for you now to be working with each of your SME clients during this month of June, perhaps into July, but primarily in the month of June, to sit down and have a strategic meeting with your client and plan the process. We will be updating material over the next couple of weeks based on the full in-depth analysis of what Andrew Geddes had to say in that podcast that I've referred to. And part of that will be laying out the detailed process that they use. Those meetings were 2 days, 1.5 days in actual work. And we've got the process of how that was done. So thank you very much for your support of ESS BIZTOOLS. I don't seem to have any questions. If you think of a question, please send me an email, peter@ESS BIZTOOLS, and I will get back to you. Stay safe. Have a great day. Goodbye. Thank you.